Hello class, in this video we're going to walk through the activities in Chapter 4 using our sample company Mooka the Beagle to demonstrate. In Chapter 3 we work through several types of transactions like expenses, invoices, a bank deposit, and a non-scheduled recurring expense. Now in Chapter 4 we're building on that by focusing on the banking features in QuickBooks Online. You'll still be entering some individual transactions like expenses, checks, deposits, and transfers, but we're also introducing something new, simulating bank feeds. In the real world, most businesses connect QuickBooks Online directly to their bank and credit card accounts, and transactions download automatically into the system. Since we're working in a practice environment, we'll simulate that by uploading CSV files and then matching those transactions, just like you would do with real-life bank feeds. First, we're going to look at the check register, which is basically a digital version of a traditional checkbook. It shows all of the activity in your checking account: expenses, checks, deposits, and transfers. And to get there, there's lots of ways to get there, but I'm going to click on the gear icon and select Chart of Accounts from the list here under your company. Next, I'm going to find the checking account, and to the right of it, I see a button to view the check register. The check register in QBO is interactive. You can drill down on any transaction to view the details, make edits if something needs to be updated, and save changes right from the register. So if I click on this, I can see I can change some of the details here. And also if I wanted to see the original transaction entry screen, if I hit edit, I get back to the original entry screen. So we're looking here at an expense transaction that we recorded in Chapter 3. Since there are not any changes that need to be made, I'm just going to close it out. But if I did need to make changes, I could make them directly here and then save the transaction. Some common mistakes that we'll see when we look at students' checking accounts that aren't balancing with the check figures in McGraw-Hill Connect is that it's often duplicate transactions, so watch out for that. If you see the same amount and the same payee in there multiple times, especially if it's the same date, that isn't necessarily telling you that it's duplicate, but there's a good chance. You'd want to review your source documents. In this case, you'd want to go back and look at your textbook and see, maybe did I enter a duplicate transaction. We'd also in real life be able to find those types of transactions by comparing the register in QBO to what actually cleared the bank, either through a connected bank feed or by reviewing the monthly bank statement. In this chapter, we'll be simulating a bank feed, which normally sends transaction data directly from the bank into QuickBooks. Since we can't connect to a real bank here, we'll mimic that process by importing a file that represents what the bank would have sent. Keep in mind, matching transactions from the feed is helpful, but it's not a full bank reconciliation. A proper reconciliation compares your books to the official monthly bank statement, making sure everything that cleared is accounted for and nothing's duplicated or missing. This chapter skips that step, which is sort of interesting because it's a banking chapter, but we'll take a look at how bank reconciliations work a little later in the class. I'll add at the end so that all of our check figures throughout the class match. So I felt that was an oversight by the author. So I do want you guys to have some experience with a formal reconciliation in QBO, but we're going to wait to the end of the class to do that. But we will get experience with matching transactions as we go. But just remember, matching helps keep things organized day to day, while reconciliation is about confirming accuracy at the end of the period. Both matter, but they're not the same thing. Matching is ongoing, while reconciliation confirms the integrity of the records. QBO has several different forms recording different types of transactions that relate to the checking account. And understanding when to use each one is important for keeping your books clean and accurate. So if you remember, if you're back on our Canvas homepage for the course and we go to Course Resources, I have these tables that talk about several types of transactions with customers and several transactions with vendors. So these will provide some insight and quick summaries of some of the things that I'm going to say right now. So as far as money coming into the checking account balance, there are three main screens that we use to record that. They are the received payment entry screen, the sales receipt entry screen, and then the bank deposit entry screen. I'm going to talk about each one of those individually. So I'm going to start off by talking about the receive payment screen. So the receive payment screen is used when a customer has already been sent an invoice. And we practiced recording some invoices in chapter 3. So I'm going to pull up the receive payment entry screen. And if I select one of those customers that we invoiced, I remember invoicing Carlos Hafra. So if I select him there, yes, I can see that the invoice for Carlos is pulling up here on screen. So what an invoice does, and we looked at the journal entry behind it before, but I'm going to remind us, is it causes an increase to our accounts receivable and an increase to our revenues. We use the invoice screen when we have performed services on credit. So we did the work or we gave the goods to the customer, but we haven't collected their money. So when we send them an invoice, it's a bill to the customer saying, hey, you owe us money because we did this work, we gave you these goods. And now on this receive payment screen, we're showing collection from the customer for that previously sent invoice. So you can only use this receive payment screen when you've previously recorded an invoice, otherwise it won't work. Now when the customer pays us, when we receive their payment, we could receive their payment in different forms. And if we receive their payment in the form of cash or check, then that's not going to be deposited immediately to the checking account. Instead, we would put that into an account called payments to deposit, because we have to bring those that currency or that check down to our bank and make a deposit. But if they paid us electronically directly into our checking account, then this would hit our checking account immediately, and the receive payment screen would have an impact on checking right off the bat. Since Carlos is not actually paying us right now, I'm just demonstrating these screens. I'm just going to close out of this transaction. So the next screen I'll talk about will be this sales receipt screen. So it's under customers here, sales receipt. You use the sales receipt screen when the customer is paying you at the time that you're making the sales. In other words, a cash sale, no invoice involved. This is common for businesses that get paid immediately, like retail shops. Just like receive payment, the funds from a sales receipt usually go to the payments to deposit account first, unless the customer paid you in a way that hit your bank account immediately, like a credit card payment, a mobile payment, or an instant bank transfer. In that case, you'd usually have QuickBooks deposit straight into the checking account instead of going into the payments to deposit. But if they paid you in form of cash or check, then you're probably going to deposit to the payments to deposit account, which is more common. And once again, I'm not going to save this screen. I'm just going to close it out. And then finally, I'm going to pull up the bank deposit screen. The bank deposit screen most commonly is used after you've recorded payments from either that receive payment screen or the sales receipt. When customers paid you in the form of cash or check, you're going to deposit to the checking account, and then you're going to remove from the payments to deposit. You also use this screen to record other types of deposits that didn't come from customers, like a loan, an owner contribution, etc. In those cases, you enter the source manually and assign it to the correct account. And that's what we did earlier. I'm actually going to pull one of those up. So we recorded 2 deposits by the owner. So if I edit that, I can see what we did earlier. So we saw, yep, bank deposit hitting the checking account. And this was not from a customer, it was the owner investing. So if we had like loan proceeds, owner investments, those are some common situations where we might use this screen. All right, now that we've talked about the main ways to record money coming into the checking account, let's switch gears and talk about how to record money going out, like you're paying bills, making purchases, or writing checks. So I'm going to close out of this screen. And there are 3 main entry screens that we'll use that are going to reduce the balance of the checking account. One of them we've already seen earlier, the expense screen, so I'll pull that up again. You can use the expense screen to record payments that came out of the checking account by default, ACH, electronic transfer, or automatic withdrawal. It's a flexible form used when there's no need to track a check number. You can also use it to record credit card purchases, and we did that last chapter a little bit, as long as you select the correct payment account. But of course, if we selected a credit card payment, then that's not going to immediately hit the checking account. It'll hit the checking account when we pay the credit card company later. So I'm going to close this out, and then now I'm going to talk about checks. So if I mouse over create again, I can see under vendors I have a check entry screen here. Use the check entry screen when you're recording paying someone by paper check, or when you want to record the payment as if it were a check, even if no actual paper check was written. This form gives you a way to enter the check number, track it in the register, and print it if needed. It's also commonly used for electronic payments that function like checks, like bill pay through your bank. And the third one, I'm going to close out of this, is the pay bills screen. So if I mouse over create again, I can see it under vendors. Now notice that in vendors you got bill and then you have pay bills. So you can only use pay bills when you previously recorded a bill in QuickBooks. This form tells QuickBooks you're now paying off an amount that you owe. You'll choose the bill you're paying, the payment method, and the date. Now, we did not record any bills in Chapter 3, so there's not going to be any bills that will populate here. And you can see that we don't have any bills to pay. So you can see here you would select the payment account that you're using to pay off the bill. And then basically a bill transaction that would have been entered previously, that would cause an increase to your accounts payable. And then a pay bill would decrease the account payable. But we don't have any of those to demonstrate for right now. So I'm just giving you a little overview of the transactions that could cause money to come into the checking account as well as money that would come out of the checking account. We're going to get some practice of this as we record transactions now, and also there's a section in the text that talks about everything that I just mentioned too, so make sure to read through that to hear a different perspective. And now that I think about it, I alluded to a fourth common transaction that would decrease the balance of checking, where we pay off the credit card, and you might record that through a check entry screen if there was a check issued to the credit card company, but it's also possible that you might use this pay down credit card screen. And we don't actually see that in this chapter, but I believe it does come up in, I think, maybe chapter 6 or 7, so we'll see that down the road as well, but I just thought I'd mention it real quick here. All right, so now I'm going to get into recording some actual transactions from our textbook. And the first transaction in chapter 4 that we need to record is an expense type transaction. So I'm going to mouse over the create button and I'm going to select expense under vendors. And let's see, the details on this one is that we are paying BA160 supplies. So I'm going to select them. And what I want you to notice once I do that is how this row here fills in with some details. So I'm going to do that real quick. And you'll notice that BA160 supplies, as soon as I selected them from that drop down, it pre-filled this row with some information about an expense account and a dollar amount. Now, this is some automation that QuickBooks is trying to help us with here. And what I find is that this automation sometimes causes problems for my students because they get to the detail from the book on this transaction, and the book is having us charge this 5,024 office expense account again, but the amount of this particular transaction is $26, not this $116. So what I sometimes see my students do is they come down here in the second line and they throw an office expense and they put 26, and then what we end up having is a $142 transaction. No, we need to not do that. We need to basically come into this line, change the amount to 26. We need to verify, is this the correct expense account? And they give us a different description too. It says we bought some software, so we write that note there. Oops, get my caps lock on. And then also the memo, I think we're going to write something there too. It says purchase of software. Now, you can leave this automation on where it would pre-fill and potentially save you some time by putting an account in the category. But if you feel like you might make mistakes with that, you might want to remove that setting and tell it not to do that any longer. And that's really up to you, but you might want to watch out for that in Half for Cyber if you think that might be a mistake you would make. So I'm going to save this transaction, but before I do that, I got to make sure that I get my payment account right and my date. So I'll talk about how to remove that setting in just a second. So the date was January 11th, and the payment account was the Visa credit card, so that is correct there. So now I am going to save and close, and then I'm going to pull up that screen for the setting about that automation. So if I go to the gear icon, I go to account and settings, and I believe this is under advanced, and then automation right here. And the setting that we'd want to change, if we don't want to do that again, where it put in account number and amount based on previously entered contact, I'd want to turn that off. So I'd click the pencil icon, flip that switch, save, and then if I return back to that screen a second, so I'm going to go create expense. I'll select that same supplier just to demonstrate, and now it's not pre-filling that. Personally, I've seen a lot of students make this mistake, so I don't know. I might suggest removing that automation setting. It's up to you though. And I'm not recording another expense immediately right now, so I'm going to close out of this one. All right, so the next transaction that the text asks us to record is a check transaction. So I'm going to mouse over create, under vendor select check. So now we are also dealing with Bishat Supplies again. So the payee is Bishat Supplies, and we're writing them a check. The date is the 13th of January. The check number is going to autofill with number 1. We're not going to change that in this case. And then because I removed that setting, it's not pre-filling with an account here, so I'm going to go through and select it, and it does say that we are going to charge the 5024 office expense account, and this time the description is office supplies. The amount is $198 even, and they ask us to enter a redundant memo of office supplies. If we had any type of source document here, we could attach a PDF or an image or something like that here, but we don't. So we are just going to save and close out of this screen. Now, since that was a transaction that impacted the checking account, and I still have the bank register open here for the checking account, I can see it here in the payments, and I can see the balance was reduced because of it. All right, now that we've recorded a couple of transactions manually, we're going to switch over and simulate a bank feed using the credit card account. In real life, QBO can connect directly to your bank or credit card, and it pulls in transactions automatically. That's what a bank feed is. But since we're working in a practice company, we can't actually link to a real credit card. We're just going to upload CSV files, which are basically spreadsheet files that contain the transaction data, kind of like a table you might see in Excel. And once those transactions are uploaded, we'll be able to review them. We'll match them to what we've already recorded in QuickBooks, or add them if they hadn't been recorded yet, just like you would in a real business. So to do that, from the navigational menu, I mouse over my apps, and then in the accounting group, if it's not expanded, I expand that, and I'll have bank transactions here. So you can see here is where you would actually connect your bank or credit card account, and there's a little video here if you want to see how to do that, but we are not going to actually be able to connect to a real bank account or credit card account. So what we're going to do instead is we're going to upload transactions. So the CSV file that we're going to upload first here is going to be labeled C4.3. So I have them in the Canvas course. So if you go under the course resources area and you scroll down the page a little bit, you'll see data files for chapter 4, and we can see that C4.3 credit card CSV file. So we're going to download that, and then I'm going to take a look at it. So I'm just going to open up the CSV in Excel here and expand these columns out so I can read them, and you can see, okay, there's 3 transactions that were entered into the CSV file. So some dates and some vendor names and amounts and so on. So close that out. And now I'm going to go back into QuickBooks and I'm going to upload transactions. So the first choice here is to select the QuickBooks account for your file uploads. So these were credit card transactions. So I'm going to select that 2100 Visa credit card account. And then I'm going to upload from the computer. So then I browse for the file. I have it right here. C4.3 credit card. Uploaded successfully. And they're asking us some questions. So the first question is the first row in your file a header. So I probably should have kept this open just to sort of talk about that. So a header means like labels. So these are all labels for the contents underneath. So yes, that's true. That's most common, but we do need to verify that. How many columns show amounts? In this case, only one column shows amounts. So we're going to keep that. Next, we need to select the date format used in our file. So if we look at that date format, it's the month first, then the day, and then the year. So it's this first one works right here. Next, we're matching the fields inside of QuickBooks against the columns in our file. So it's saying the date in QuickBooks matches up with which column. It's like, okay, the transaction date, yep, that's the one we want. Description is showing the vendors here. We'll keep that the same as well. And then the amount is also the amount column in our file. And then we don't have any check numbers, and that one's optional anyway, so we don't have to map that one. It doesn't apply. So then I'm going to click the continue button. And all these steps, like, once again, are in the book. I'm just sort of walking through them with you here in the video for a little reinforcement and support. Now we're being asked to select the transactions from the CSV file that we want to import. We want to select them all, so we're just going to click this button, which is going to select them all, and continue. And it's verifying the number of transactions from the CSV. And do you want to import now? Yes, we do. So now we're getting confirmation that import was completed. We're going to click the done button, and now we're going to select go to your transactions. After uploading the credit card transactions, our next step is to match them with the credit card transactions that we had previously manually entered into QuickBooks. So we see those here right now on the screen. And if we wanted to get back to them, you can select, if you got out of the screen, they're under accounting, under bank transactions. We can see them here. And we can see here under the pending that it's showing 3 transactions that we need to review. And now we basically review the details here against the details over there. And say, okay, the date isn't exactly the same, but it's probably because of the posting date versus the date of the transaction. And the vendor and the amount are the same, so that's a match. And then the next one, same thing, the date, the vendor, the amount all match. And finally the last one here, they match as well. So now we can see these transactions again by seeing them under posted, and we can see the details that they matched. And if we had made a mistake and we didn't want to match them, we could undo that here. Then also, if I go to the bank register by clicking that button, now I see a C next to each of these showing that they've been cleared. They've been tentatively reconciled. And then I'm reading along with the book here, and now in section 4.6, which you should read through, they make the comment about reconciliations here, and they say, note that with QBO's ability to match downloaded bank transactions with QBO data on an ongoing basis, some QBO users find they no longer use a monthly bank reconciliation. Basically, they are comparing the bank balance with their QBO balances on a real-time basis instead of a monthly basis, which provides even better internal control since they become aware of discrepancies and potential issues sooner. Now, that's sort of a half-truth there. I agree that using the match feature in here is great, and it probably makes the month-end reconciliation easier because you are keeping a close eye on the account and making sure the transactions in the bank feed match those that you've entered on a regular basis. However, it's not accurate from an accounting best practices standpoint. Bank feeds can have errors, missed transactions, duplicates, or timing issues. Banks even occasionally post corrections after the fact. So while the feed gives you daily insight, it's not the same as the official bank statement. The monthly reconciliation step serves as a formal internal control, confirming that your records match the bank's official records, not just the feed. It's an essential part of ensuring the integrity of your books, especially for audit readiness, financial reporting, and fraud detection. So I don't agree 100% with that statement, which is why I will ask you to do a reconciliation at the end of the class. I'll have that added on at the end of chapter 10. All right, moving on. The next transaction that we're going to record is a bank deposit. So I'm going to mouse over create. Under the other column, I find bank deposit. In the add funds to this deposit section for the account, we are borrowing money from the bank. So we are going to record this to a liability account called loans payable, and that account isn't in our system right now, so we're actually going to select add new here, and then we're going to give the details. So the name of the account per the book is loans payable, and I gotta spell it correctly though, and then the account number is 2300. The account type is a liability, specifically other current liabilities, and then the detail type per the book is loan payable. So then we're going to save the account into our system. You see that there. And then the amount that the business is borrowing is $2,000 even. The payment method is in the form of a check, and the reference number is 5002. I guess the owner is making the loan. So normally we'd probably have a little memo about that, but it doesn't look like it gave us any detail to type in, so we're not going to. Save and close. And then we have another transaction to enter. This one's an expense one, so mouse over create, under vendors select expense. The payee is a new vendor, so we're going to add new. And the company name is Luminous Link. Normally we'd enter some contact information, but we don't have it, so we're just going to save. And the date of the transaction is January 13th. And the payment method is credit card. The payment account is the 2100 Visa credit card. We do not have a reference number. The categories we reselect the account. It's going to be charged to an expense, our 5040 utility expense. In the description, we're going to type in internet service, and the amount's $400 even. And I am going to save the transaction. And then remember that anytime I wanted to look at a journal entry, I can go to more and see the transaction journal, and it would show me the accounts that are debited and credited. And that's always a good idea for new accounting students to reinforce, the double entry debit and credit system that you learned about in your previous accounting class. So here, since we used our credit card, our liability is being credited, it's increasing our liabilities, and it's also increasing our expense through the debit there. All right, so we have a couple more transactions to record. The next one is an expense as well. So go to create expense, and then let's see for this one. It is Luminous Link again. So now they're in the system, so I select them. The date of this transaction is the 14th of January. The payment method is credit card again. Make sure that the payment account is also credit card. It is. And then for the category, it's still going to be charged to the 5040 utility expense. And this time the description is telephone service. And the amount is $370 even. And I'm just going to save and close this one. Our next transaction is a check transaction. So mouse over create, under vendors select check. And who did we pay in this case? We're paying Hafra Cyber, which we have Carlos Hafra as a customer, but don't believe we've added Hafra Cyber as a vendor. So we're going to add new and do that. And normally we'd add contact information here again, but all we really have is the name, so we'll type that in. And then we'll save that. And then the bank account is, in this case, coming out of 1001 checking. The date of the transaction is January 16. Notice that the check number auto-filled, so it's going to number 2 because it's our second check. And let's see, the category for this one is going to be charged to 5022 legal and professional services. The description is going to be cybersecurity services. The amount is $720 even, and we're going to save and close this one. And now we're going to practice matching again. So we are going to mouse over My Apps under Accounting. We're going to go to Bank Transactions. From the Link Account button over here, we're going to click on this drop-down menu. We're going to upload from File. And we're going to first make sure that we're selecting the correct QuickBooks account, and we are uploading the feed from the credit card company. So the Visa is selected there, but if we were doing the checking, we'd select that, but no Visa right now. We're going to upload, and then the file once again is under Course Resources area. And now the file that we're going to be doing is the second credit card for Mookie the Beagle from Chapter 4. It's this one here. So, oops, I previewed it. You can do that. It's not a big deal. I can just download it. I can actually see what's in here. So I got the headers at the top. I've got a column with amount, so it's formatted the same way as the last one. So I can hit download. It'll put it on my computer, and now I can go back into QuickBooks and upload it. So I found it in my downloads folder here. Make sure the details match where I'm at. EM 4.5 credit card. That looks good. And it says it was successful. Is the first row a header? Yep, they were all labels in that first row. How many columns showed amount? Just one. The date format was the same as before, and then these columns matched up. So I don't have to do any changes there. Continue. I want to import all the transactions, so check the box at the top and continue. Get the confirmation. Do I want to import now? Yeah, I do. And the import's complete, so I'm going to select done. So now I can look at the details and see if they match. And if they match, I select the match button. And the date, the vendor, the amount, the date, the vendor amount, yep, that's good. And the same thing here, that's all good, matching this detail here. And now they're showing under posted along with the others that we posted earlier. And once again, if I go to bank register for the credit card account, all of them are showing tentatively reconciled. So now that we've uploaded the credit card feed a couple times, now we're going to upload a feed from our bank and match against the entries that we entered that hit the checking account. So the process of that is pretty much the same as uploading the credit card file. So we're going to go to My Apps under Accounting, Bank Transactions. We're going to come over here to this drop down next to Link Account. We're going to upload from File. But now, instead of selecting the Visa credit card as the QuickBooks account for the file upload, we're going to select the checking account. And then we need to upload the file, but before we do that, we need to get the file. So we have it here under the Course Resources area again, Chapter 4, Mookie the Beagle. We're using this one, the EM 4.6 Checking CSV. So I'm going to hit that down arrow to download it, put it on my computer, come in here, upload it, find the file. It's in my downloads folder, so there it is, EM 4.6 Checking. Open that up. Upload successfully. I guess I didn't look at it. Probably should, just to make sure it's formatted the same way. And it looks like it is, even though it came from a different business. Our bank, in this case, we have basically the same kind of layout. We've got headers up top. Yep. How many columns show an amount? Just this one. The date format's month, day, year again. And this detail matches. So continue. Got all these transactions that were in the file listed out. We're going to import all of them. So hit that button up top, continue, confirm that there's 7 transactions. Yep, there are. I want to import them now. All right, it's done. Hit that button, and it looks like, oh, wait a minute, nothing here in the pending, because up top now it's selected the Visa credit card. So I want to change that to the checking account. And now under pending, I see those 7 transactions. So once again, got to go through and compare the date, the vendor, and the amount, date, vendor, amount, and hit match. And same thing here. I have a vendor there, but we got more detail in the system here. So we'll match that. Match that. It looks like they're all good. They are. Oops. There we go. And once again, if I go to posted, I'll see that they've matched. And then if I go to bank register, I'll see the C next to them to show they've been tentatively reconciled, because we haven't gone through the formal bank reconciliation process yet. All right, looks like we have another transaction. So I'm going to mouse over the create button. In the other group here, I am going to select transfer. So now Mookie the Beagle wants to move some cash from its checking account to a money market account to earn a better interest rate than the checking account. So in the transfer funds from field, I'm going to select checking. So we're moving from checking into a money market account, but we don't have one yet, so we have to add a new account. We are going to name it money market. The account number per the book is 1010, and the account type is bank, and then the detail type is money market. We're going to save the account, and the amount that we're transferring is $20,000 even. And then they asked us to enter a memo, transfer from checking to money market account. And it sometimes can be easy to overlook the date. The text says this transfer is happening on January 15th. All right, and we're done with this. So we're going to click on the drop-down menu and select Save and Close. At this point, the text wants me to pull up a general ledger report, and I'm going to do that. So I'm going to go to reports, and you can find that under standard reports, but in an earlier video I had you create a custom report. So I'm just going to find it there, and here it is, general ledger all dates. If you didn't save the earlier report from a previous video, you can go to standard reports, you can find your general ledger, and then what I did is I just changed the drop down here to say all dates in case there were any date errors. It helps us find everything. And then if you wanted to save that customization because you didn't do it earlier, you could just hit this button, but I already have it saved, so I don't need to do that. And then basically I'm checking these figures against my solution, and I'm just going to sort of scroll through them and show you them, and I'm comparing right now and they all perfectly match, so there's no errors here. So you could look at this if you wanted and compare it against your file for Mookie the Beagle and see if you had any mistakes in it. All right, so that's it for Mookie the Beagle in Chapter 4. Now it's your turn to get into Hafra Cyber and do similar things. You're going to be recording some transactions. You are going to be simulating bank feeds from the credit card and from the checking from the bank. And you're going to be matching some transactions. And if you need help, if you have any questions, don't hesitate to ask. Thanks for watching.